Hey traders, Mandla here at FX Link. Thank you for joining us on this week's market prep videos. In this week's video, we are going to take a look at the trading opportunity that I have on my radar for this week. And towards the end of the video, we are going to talk about the three most important elements of trading, which is the mind, which is your trading psychology, your method, your trading system, and your money management. So I'm gonna have to leave you right now. After the intro, I'll see you on the charts. Now let's take a look at the dollar Swiss pair on the daily time frame, which is my higher time frame. It really varies from trader to trader which higher time frame you want to take a look at. Personally, I like to take a look at the overview of the market on my daily time frame and the major structure levels on my daily time frame. As you will see right now on the dollar Swiss, as the market has been going down, let me scrunch it up a little bit. As the market has been going down, okay, from our swing high right here back to our swing low right here, it's clear that we have been violating previous important structure levels in the past. From here, okay, ever since we broke these levels of structure, and let me put a line on it, okay, ever since we broke these levels of structure, I have been having a bearish bias as of late. As you know, that markets from time to time gives us a straight pullback or a complex pullback before continuing down, and this is an example of a complex pullback. As you see, price has been ebbing and flowing right over to our previous structure levels on our downtrend right here. Okay, even though price has rejected these levels of structure, I'm still looking to go bearish as price has retested this structure shelf that I was looking at right here, which is from this low right here back to this high right here, and you see price is looking to retest these highs, has actually retested these highs over right here. Okay, let me delete some of these. I like a cleaner chart. Okay, so as part of a complex pullback, price likes to move in harmonics, which is ABCD patterns, and we are going to get our ABCD pattern from this swing low right here back to this swing high over right here, which is our anchor leg right there. And as I copy and paste that, boom, what do we get? We get a completion over to these highs right here. And as price has been going up from this swing low, okay, to this swing high, price began to give us a retracement, then a retest of these highs right here, where back to our previous structure resistance right here. Okay, so as price began to give us a retest of those highs, what do we have right here? Yes, double top. After having a double top, we have a bearish divergence. Even though price hasn't gotten overbought on our daily time frame, we still have a bearish divergence, which gives us a sign that we will have some type of relief in the market. Okay, then we have a doji candle right there. So as I go to my lower time frame, okay, as you would notice right now on our 4-hour time frame, our double top, it begins to become clearer and clearer. Okay, from this double top right here, this large double top right here, we had a retest, and with it we have another double top within this double top. As you take a closer look, we have a double top, okay, then a consolidation period between these highs and these support levels right here. Okay, so as I go to my lower time frame, already we have been exhausted on our RSI indicator as soon as we retested these highs over right there, which gives us a sign that these highs are pretty significant and are pretty recognizable on the daily time frame, which would be clearly visible to the market makers too. Okay, so as we take a closer look right here, you would notice this large big candle right here, okay, which is at these highs right here. Let me change the color, make it green. Okay, so this large big candle right here caused the market to give us a lower low, lower close, lower than this double top right here, the support of these double tops right here, right there, giving us a sign of a bearish rotation, not necessarily a bearish trend continuation, but a bearish rotation, a short-term takeover of the bearish investors in the market. Okay, so as we got a lower low, lower close, price began to give us a retracement back to these supply levels right there. If you are a supply and demand type of person, you would notice we have a supply level right here. So I'll be expecting price as soon as it opens on Monday to retrace back over to these levels of structure to give me a lowered risk and a enlarged reward in this case. What type of risk to reward would I have if price does retrace back to these highs and does then give us a lower low, lower close? I would have this type of risk to reward. Obviously you would have to have stops above this high right here. First targets, I would take them back to this low right here. Okay, and second targets, personally I'll be looking for an extension back to these lows. Okay, excuse me guys. For our second targets, I'll be looking for an extension back to these lows right here, which would yield 94 pips, 93.3 pips for a risk of 21 pips, which would give me a 1:4 risk to reward on this one, which is a huge risk to reward on this one. So if you are an aggressive trader, already we have extra confirmation. In this case, you might be looking for a shorting. You might be taking a short position as soon as the market opens and stops above this high. Okay, targets, you might want to take them right here, as the risk to reward would be skewed if you take your targets right here. So you might be looking to take your targets right here, which would give you a 1:1.7 risk to reward. But I personally will be looking for a retracement back to these highs over right there, and a shorter risk on this one, which would be a 22 risk, and a 93.3 risk reward on this one. Okay.